Welcome back! It is the second session of our Q2 Market Outlook on Hang Seng, focusing on the technicals. Selamat Hari Raya to all our Muslim friends and happy holidays to everybody else in Malaysia and wherever you're watching, really. Your support over the past 2 years has actually pushed the Naga Warrants team and I to strive for excellence. And we are very committed to keep delivering more educational initiatives like those we had in the previous years. We've had this beautiful new set and our speakers that we feel are really solid and gave us some exceptional information, just like Mr. Johan Lee, who'll be coming up later today. We've got two speakers, Mr. Johan Lee, the Chief Investment Officer of Sinostar Asset Management, and Ms. Isabelle Zhen, Warrants Issuer, Spokesperson, and Head of Retail Equity Derivative Sales at Kenanga Investment Bank, Berhad. But before we get started, we do have some house rules. Number 1. There will be an exciting giveaway today. First giveaway, we're giving away 100 ringgit of Shopee vouchers, 10 of those. If you can answer some questions and of course, ask our speaker, Mr. Johan, coming up after this, some really good, probing, inquisitive questions. The second giveaway is going to be for Garmin watches. We're giving away 5 Garmin watches today, and that's always really exciting because that is a really cool gift, if you ask me. Also, we've got our Q&A session happening later on. We try to compile all the Q&A questions and we'll choose the top 5 best questions and let Mr. Johan answer it. Once we've compiled that, we'll post the answers on our Telegram so we don't really interrupt the speaker during his session later, or else it kind of throws people off a bit, you know? Ladies and gents, I would like to introduce you to our first speaker for today. He's the Chief Investment Officer for Sinostar Asset Management. He's in charge of Sinostar's investment strategy, oversights, trading, asset allocation, and risk management for corporate and ultra high net worth clients. He's a seasoned investment manager with over 15 years of experience in the Asian equity markets. And Mr. Lee, he has a focus and is a bit of a specialist when it comes to using derivatives in both Hong Kong and the US market. He's also participated in our webinars last year, where he accurately analyzed the Hang Seng Index when it was trading at 25,000 for a TP of 23,000 by December 2021. And just FYI, Hang Seng Index hit the low of 20,047 in 2022. So ladies and gents, I'd like to introduce you to Mr. Johan J. Lee. Mr. Johan!
Hi, Isabelle. Thank you, Kanaka, for the opportunity. Today, I'm going to update the Hang Seng market again. I will show you guys the slide right now. During the first quarter, the exercise was trading the last quarter of 2021. The exercise is trading at 2300,000 points, and then it has this quarter it had the highest close was 24,900. It's hit it on January 21st, and then the lowest close it was 180,400 points, and it was hit on March 15, 2022. For the Q1, it's a drop significantly 14,000 points. And then the difference between the highest close and the highest close is actually 6,500 points. It's a very volatile market. And when you take a look at Q4 2021, the fluctuation is actually only 380 points. That means the market fluctuation from last quarter is actually almost double. And then in Q4 2021, it was only down it was down 2,400 points. And while the Hang Seng Tech Index also dropped a lot, and then only in March it's already fall down 10%.
Right now, I'm showing you the Hang Seng Index daily charts. As you could see, it was still a downward sloping chart here, and the index has been falling from 25,000 to very close to 18,000 point, and then there was a rebound to this resistance line. This is exactly near the 50 days moving average, and this resistance is actually the bottom in January, support of the January. So once the index rebound to this level, people just selling on the rebound, and then some of them take the profit, some of them just want to cut the loss. So at this moment, I think the index, the market consensus is the index will track between 24,000 here and between 20,000 here. But I think in the next 1 or 2 months, the market will not test the 23,000 level yet, because there's lack of good news. Just like last Friday, the PBOC announced cutting of the RRR. It released some of the liquidity, but it's not strong enough for the economy, especially when Shanghai is still in quarantine. So I think the market will expect the index going down further, testing the 20,000 level, and then may have a rebound next month after the Fed has concluded how they do the tapering. So so I think investors should be careful. And then I would like to update the sector performance. On the Hang Seng Composite Index, energy was the best performer. It rose 6.9% month over month, and then the worst is the consumer staples. It dropped down 15% month over month. As of March, the end of March, asset management under the product passively tracking index in the Hang Seng family of index was about 49 billion, and it was actually up 0.9. So actually in March, I think the market has a relief on the Russian-Ukraine tension, and also it has a relief from US and China tension too. So actually more money is coming in March, because even though it has been dropping significantly. AUM in the exchange trade product linked to the HSI and all other index family were up 23 billion, and almost 2.9% month over month is actually very good. And then for the tech, it's went up 7 billion, and it's almost represent 4.1% month over month. And then during this quarter, the past quarter, the exercise has revealed this result is actually increased the constituents by 2 from 64 to 66. The newly added component was 992 Lenovo Group. Most people know this company. And the other is 9633 Longfu Spring Company. Is actually selling bottled water. These two just add into the Hang Seng Index family in February. And then for the Hang Seng Tech Index, it has been unchanged at 30. And then there's 3 stocks included, and 3 of them
been removed. First of them is Seng. It's a tech company that they use AI technology to recognize people's face. It has a lot of government contract and is a market leader of that industry. And then we have Li Auto as a new energy vehicle producer. Another addition was the Xiaopeng. Actually, it is another new energy vehicle producer. And then there's 3 other stocks that have been removed from the market. From the index was Tongjiang Travel Holding is a travel agency, online travel agency. And then we have 2013 Weibo is like a China Twitter. And then we have 2518 Auto Home is a online home seller, online auto seller. And then we could talk about the key events. During this quarter, in February, there's a huge events happening in Russia, between Russia and Ukraine. The history of this event, I'm not going to cover it, but I want to talk about the implication of this war, because there's quite influential to all other parts of the world, even though it's been in the Far East. First of all, it's actually reinforced the bull case for commodities, because for the Russia, they are actually the OPEC plus members, and then they have 4 million barrel per day production, and people think that during April this production would be gone because of the US sanction and the war and all of the other reasons. So there is actually 4 million barrel per day of production is gone. So if I remember that when the war started, the oil price almost jumped $20 from 100 to 130. And also, Russia is the biggest European natural gas producer. It's also produced wheat, corn, and then Russia represents 22% of European gas supplies, and it represents 25% of European oil imports. So the whole Europe country actually suffer a lot, because almost 50% of their energy imported through Russia, and this supply has been disrupted during the war. And then the other thing is Ukraine is actually a large wheat and corn exporter. It exports 7% of the wheat to the world, and then 22% of corn, and it's actually a very, very significant player. Before the war, actually not much people pay attention to it. So actually it influenced the price very much. So and people think that this disrupt supply will not be recovered soon. And another very, very important implication of this conflict, it was during the Sino-US tension, there's a lot of company already trying to move their supply chain out from China, and then trying to relocate to some other country, have fewer government influence, such as Vietnam, India, and Cambodia, and for textile. But after this Russia and Ukraine conflict, the investor are more skeptical about globalization, the idea of globalization, because basically, other than the government action, there's too many other input that could disrupt the supply of their supply chain. So right now, a lot of international company, they are trying to set up their supply chain domestically to avoid further intervention by foreign government or transportation or the influence or the outcome of a blockage because of COVID-19. So right now the new trend is most of the company thinking about supply chain security more than cost. So this will actually push up the cost of producer a lot, and it could be it could be permanent. And this list is actually a list of sanctions that the EU and US imposed to Russia. And this covers a huge spectrum. It covers the energy sector, the financial, even the individual travel and assets got banned from all the foreign country, and then they were got kicked out by the banking system. They could no longer use the swaps, and they could not use the US dollar. So actually, it was a very serious hit for Russia. But the most influencing events is because Russia could no longer produce oil or sell the oil to the EU, so it will drive up the energy and also the farm products price. And other key events I think I should mention is China and US tension. In the past months, the US SEC it just includes 5 Chinese firms on a provisional list of issuer under the HFCAA. Actually, it's just telling that those 5 Chinese firms has to clear their auditing practice, allow the U.S. authority to look into all the materials from their auditing book, and the PCAOB thinks that it is unable for them to inspect and investigate completely because some of the material was held by the authority and could not be released to the auditor. And then China has never worked with PCAOB to allow the audit investigation. So that's about 250 Chinese firms could be delisted in the future. And then Alibaba, one of the most heavyweight, alone account for 32% of the ADR trading. So he is one of the Alibaba is also one of the targets that could be delisted in the future. And then in the ADR market is very centralized. The top 5 firms cover the 60% of all the ADR trading. So that's why in March the market dropped so much in Hong Kong and also in the ADR side for the ADR stocks in China. And then for these 60 stocks, 60 firms, 35% or 34 of them are communication, 29 are financial, and 29 are IT. And this actually the most heavyweight of those of the tech index and also Hang Seng index. And then this also triggered a dual listing event in Hong Kong because most of the company now need to think about to dual list and then relist in Hong Kong, and so that they could still raise their money even though US has delisted the company from ADR market. but there's also some good sign. There's a sign of ease tension. The U.S. cooperation over audit records for U.S. listed China ADR signs of easing tension. On March 22, Reuters report that Baba, Baidu, and JD has been asked by Beijing authority to prepare for U.S. audit disclosures. Regarding the VIE structure, the U.S. IPOs approved by the CAC and registration with the CSR will be needed. The new VIE rules are being reviewed by the Financial Stability Committee, after which they will appear before the Dividend Reform Commission before final approval by the Standing Committee of the State Council. Such a cooperative outlook is far more positive than all the bad news in the past few months. So the Chinese is actually asking those companies to prepare to open up the record for the U.S. authority, and they also reassure that the company, all the listed company have their free will to choose their place of listing. That's the positive signal that the government gave out in the past weeks. And also on March 23rd, the U.S. government announced that it will reinstate a tariff exemption on 352 Chinese products. This is right after Biden and Xi Jinping talking through the phone. I guess this is some good gesture from the U.S. for the Chinese and asking them not to support the Putin, the Russia invasion. But I think the more significant reason behind this lift is because those products' price has been go up too much, and then the consumer in U.S. could not. The cost has passed to the consumer in the U.S. and could not be transferred. Could not be. The producer could not find a better source of products. So actually the whole the cost has to transfer to US, and that's also helped the CPI gone up so fast. And also some other events is the Chinese real estate market. During the past week, 3 cities has announced property policy fine-tuning since March 30th. There's the 3 cities is Fuzhou, Xuzhou, and Qinhuangdao. And then the main focus is still on removing the current administrative restriction. But it's actually very good that Fuzhou has removed the home purchase restriction and allow home buyers to use the Housing Provident Fund for down payment. And Xuzhou has removed the home purchase restriction too, and the home resale restriction in one go. And Qinhuangdao has removed the home purchase restriction and restriction on commercial mortgage. Following by these news, also the state-owned enterprise and some asset management companies has helped those some private developers. And also the latest news is some state-owned company has taken over part of the debts of a Chinese real estate developer called Zhongguo Aoyuan 3883. And then also there is rumor in the market that the lending rate will be lower, and then there could be a chance that the government will cut down the RRR in the near future. And then I want to share some market expectations expectation on the US data. Right now, the market is trying to price there will be 7 rate hike, and each has 25 basis points in 2022. And because of the strong January CPI data. And then for 2022, the core PCE inflation is forecast to 3.1%. And then there is no sign of slowing down for the inflation. So it's quite a challenge for the fact that for the Federal Reserve to raise the rate hike and then trying to unwind the position. And Q4 forecast, the GDP will be lower to 2.2% because of the Omicron, and then also there's a expectation that the Federal Reserve will start tapering. That's also will pull down the GDP. And the wages price spiral is another thing the U.S. Federal Reserve is worried about, because for the past 2 years, the cost of labor drive up a lot, and there's no sign of easing. So the labor market is quite tight, and with the price, with the CPI very high. There's actually not much the Federal Reserve could do other than raising interest rate. And I would like to talk about some sector that I think investors should avoid. Macau gaming, just like a few months ago, there's no sign of giving the government will give out more license. So, and the open up of the border between Macau and China is in the near future is very low. So I think investors should avoid those sector. And then tech, even though it's been beat up very badly and the valuation has gone down a lot, but I think the government has not give out a lot of positive policy to support the tech innovation opportunity, because I think the government still thinks tech should not be the backbone of the economy. So they still want to have more control. For example, they want to watch very carefully the fintech sector. They just order. There's rumors that they want Tencent to spin off their WeChat wallet, and trying to put more authority into the fintech business. And other sector I think should avoid is the biotech, because it's actually because the biotech, the way that they price their products, the government thinks that is already hurting the economy, the Chinese economy, because many of the drugs are too expensive, and the government is still trying to monitor the process of how they price the drugs. So there should be some more policy coming out that will restrict the price increase for those drugs, and also they may use the government central collect system to buy those drugs in a large scale and then try to lower the price. So I think biotech will still become very volatile in the next quarter. And I want to talk about some sector that I think is more favorable. Oil and gas sector, like Sinostar and China Oil. I think this company will enjoy the rise of oil overseas, and they also paid a very good yield, around 6 to 8%. So I think yield is dividend is something that investors love lately. So they will continue to put money into this sector. And also green energy provider. This is already been a center of investment for the past 6 months. And I think this will continue because Xi Jinping still continuously promote the idea of green energy and trying to lower the carbon usage. So I think green energy providers should be a sector that investors look after. And another thing is the government may soon release the subsidies that have been withheld almost a year now, and it should be a massive funding, and that could cover most of the costs that those green energy producers need to invest in 2022. For example, there's Huanen Energy. It's already announced that they need to invest 40 billion during this year. So it's actually they need a lot of cash to cover those costs. So this is the government subsidiary fund should be very important for them. And also bank, I think is a good investment now, because most of them released the earning, and then most of them have 7 to 8% yield, and all of them even have a very bad year last year. The earnings still have a high single-digit growth, and also because of the property market is going to has a better sentiment now. The banking, the bad debt worry on the banking industry should be relieved. And then also insurance company, I think people will start buying insurance because company, because during the past 2 years, people worry that how much money they put into those real estate developer debt. Right now, there's a sign of relief for the sector, the real estate sector. I think the insurance should recover more. And then property management and real estate developers is very cheap now still. During last year, I think investors should avoid real estate developer altogether because the development risk is so high. But after this past 3 months, some of the key major players has been liquidating, and then few of them has already asking for the government help, and government is trying to ease the policy control for property selling. So I think this add up, or investor could start buying some real estate developer at low price. At least I think for this quarter, it should be have a very good performance. And some less favorable, but I think it's very attractive investment too, is basic material, because like I said earlier, the Ukraine and the Russia tension create another bull market for the basic material. But I think this sector is less favorable because it has already enjoyed a great run for the past 6 months. So some of them are already not very cheap, but the underlying products still have a very nice upside in the future, I think. And also utility has a bad hit during the Q4, especially the last 2 months, because of the coal price went up too fast. So almost all of the utilities in China record a loss for 2021 because of the coal price, their power plant. So I think this could be reversed soon because the government keep allowing those coal importer or producer to import from overseas, and then also the government try to look after is there a market manipulation in the coal selling. So I think the utility should be the Q2 for those utilities should be way better than last year. So I think they were making money very soon. Okay, so this is today's presentation. I hope you could make some money out of it. Thank you.
Thank you so much, Mr. Johan. Always a pleasure sharing some insights with you on a Saturday morning, and I especially love the part he shared about sectors to focus on and sectors to avoid. I always find that exceptionally useful when looking at the Hong Kong markets. Next, we're going to power on to structured warrants. Last week, we covered 3 main parts: the barbell strategy, musty strategy, and the last defense strategy on the live matrix. So today, we're going to look a bit into warrant ingredients, issuers and market makers, and what happens at expiry for structured warrants. It is more technical than last week. Last week was more trading based. This week is a bit more textbook, but these are things that you need to know when you're trading structured warrants. All right. So I love this quote by Jesse Livermore. If you've read his history of life, you know that he's had quite an interesting life. But I do believe that his quotes about trading and confirmation, waiting for market confirmation, even if you're not buying something at the lowest of low prices or highest of higher prices, it is very useful because you get to have a bit more certainty, a bit more probability of success in your trades. All right, issuers. This slide answers the question of why does Kananga hire somebody like Isabelle and her team to issue structured warrants? Issuers, they have 3 roles. Mainly, it is issuing structured warrants, which means if Inari says 175 and you want a structured warrant deriving its value from Inari, it will be called Inari C57 and it'll be priced at, for example, 23 cents. So that's what an issuer does. The second role of an issuer is also as a market maker or liquidity provider. In some countries, an issuer can be different from a liquidity provider or market maker. It can be by one party A to be the issuer and party B to be the market maker. But for structured warrants, issuing in Malaysia, they're usually the same investment bank. So the market maker, for example, will post bid and ask prices offering liquidity, for example, over here. This is Armada, the underlying, or as some people, they call it the mother share, right? That's what retailers call it. And Armada C64 is the warrant, and you can see on both sides there's always this super round number. Maybe it's 500k or 200k, and that is the market maker. That's what the market maker's role is, to provide liquidity. Because let's say there are 100 Armada warrants in the market, and some of them might not have any liquidity. Maybe nobody posts any buy-sell volume over there. So it's the market maker or liquidity provider's role to actually post quantity over there so you can enter and exit a position easily. So you can see over here, this is what you would see on your trading screen, all right? Let's say over here, these two prices. But you can see that the issuer, this is say I. Over here, you can see that 500K is by the issuer. However, there is almost 2 million being queued over there. That means there is almost 1.5 million and 50K queuing over there to buy Armada at 7.5 cents. And this is other individuals, retailers queuing. Same like you can see 500K posted by the issuer, but there's another 150K over here, and those are other people. So what happens if there's no issuer? That means you just imagine. You would have no liquidity. You only have 7.5 queuing on the bid, 9 on the ask. Not very fair and not very easy to enter and exit a position, right? The third role of an issuer in Malaysia is hedging. So hedging is the most controversial role of an issuer, because a lot of people, they don't understand that hedging, the idea is to have a win-win situation. So let's say if Mr. Edmund, he buys 1 million structured warrants, what happens? If Mr. Edmund actually makes, say, 10 ticks on the structured warrants, then the issuer will automatically lose money, right? And where does that money come from? Will the issuer have a loss? No. Investment banks never lose, right? The house never loses. There's always a strategy to balance that out, to hedge it out, right? What happens is Mr. Edmund buys 1 million structured warrants. The issuer will buy on the underlying share, say for example, Armada over here. Let me just delete the mess. The issuer will pick up a certain amount of Armada, the underlying. So when Armada sees 64 and Armada, they're tied together, right? They are derivatives. 64 is a derivative of Armada. Armada moves up, say, to 52 to 54 cents. Then the warrants move up as well by the same amount if it's a 1-tick warrant. We learned about ticks last week, right? What happens is Mr. Edmund takes profit at 54 cents, then the issuer will also take profit on the underlying. So it's always a win-win situation when it comes to warrant issuers. And that's the hedging principle. So no, issuers don't lose money when you make money. Issuers love it when you make money, because when you make money, we make money. Traders make money, issuers make money too. We are on the same side of the trade. All right. And 3 things. How do issuers actually make money? Remember, I always ask you to question everything. So you need to understand how issuers make money so you don't get fooled by all of this side talk. First way issuers make money is they make money by the spread. Kind of like the money changer at Mid-Valley, you know, or whichever town you happen to be watching this from. I just happen to live near Mid-Valley. So the spread is when the bid is 8 and the ask is 8.5, right? When you go to money changer, it's not exactly only one price. It's always like a spread. So issuers make money from a spread. Issuers also make money from theta, which is time value decay. Whenever we talk about that part where there's a component of time value in a structured warrants, that is part of the issuer's way of making money. And the third way an issuer makes money is, of course, hedging, like we just mentioned. So those are 3 ways among an assortment of ways that issuers make money. Market maker. Why is it so important to understand that there is a market maker when it comes to trading structured warrants? Because you can see over here, we've got our Maybank Maybank structured warrant, which is Maybank C75, which is issued on Maybank's underlying. So in this example, Maybank is 8 ringgit 13 cents on the bid and 8.14 on the ask here. The main question that I'm answering with this slide is, can I buy a warrant up all the way the same way that I would buy a company warrant up? Let's say if I've got 1.5 million, right? No, let me rephrase that. I want to buy 1.5 million structured warrants. Can't I just buy the 500 here and the 3.5 here? And here should be 0.040 500k, right? Can't I just buy it up? No, you can't. Because there is a market making system that is dynamic, that follows the underlying price. So what this means is, if following the live matrix, Maybank is at 8.13, 8.14, and it'll be quoting at 2.5, 3. The warrant Maybank C75 won't move until it reaches the flipping point on the live matrix. So let me give you an example. Let's say Mr. Kent wants to buy all 500k at 3 cents, okay? So he picks up this entire amount over here. And what happens is the system will automatically refill that 3 cents in seconds. Sometimes it might be 5 seconds, sometimes it might be 1 second, sometimes it might be 10 milliseconds, depending on the issuer's setting. So what happens is it will keep on refilling this price. 500k at 3 cents, 500k at 3 cents, 500k at 3 cents. And you can keep on buying at the same price even though you only see 500k on the offer, because the issuer has inventory, right? We've got inventory of maybe say 35 million structured warrants that we've issued, and we can keep on selling at that price. So even if you want to buy 10 million units of Maybank C75, you can keep on buying at 3 cents even though you only see 500k over there, because the system will keep on replenishing as long as Maybank stays at this price. All good? I hope you're good, but let me just give you an example, okay, to really maybe drill it in. So let's say over here, we've got Maybank, and you'd see this for a moment, right? You'll see, okay, it's 500k. Once you buy a quantity, it will disappear for a few seconds. And a few seconds later, it will automatically reappear. That's the system replenishing it. All right? I know this is a pretty tricky concept because we don't really see any market making activity on other stocks, but I'm a bit tired talking to myself. So if you understand this, can you please press MM? Okay? So that's why you can't really buy a stock upwards. You can buy a stock upwards, right? You can buy, say, if you wanted to buy Maybank, if you wanted to bring it up to 8.18, all you have to do is buy $50 amount, maybe about 300k, and then you can move the stock, right? 300k at 8.14, 8.15, 8.16, 17 all together. Then you can move the stock upwards, but warrants, they don't work like that because there is a market maker. I see in the chats, MM. Okay, cool. That means you get it. The fundamental law of investing is the uncertainty of the future, Peter Bernstein. Yeah, that's true. All right. Next session, Warrants Ingredients. I know it won't really help you make your 1 million in 12 years or 6 years that much, but it's important to know what the ingredients are of a structured warrant in terms of equity before you actually pick it up. So we're using the example of Ta'an this morning. As you can see, Ta'an CQ, that means it's the CQ warrant based on Ta'an, the underlying. And this is what you can see. If you're a trader, you'll be able to see the issuer's live matrix, and you'll be able to see all of these details on your trading platform. You can see that Ta'an has a warrant called Ta'an CQ. Ta'an's price, for example, is 548 ringgit. Its exercise price is 388. Expiry date 5th September 2022. Ratio 5:1 with a volatility of 74.74. You can see all of this on our our warrant scanner on nagawarrants.com. So how does the issuer actually come up with 36 cents, right? Of course, they use the Black-Scholes-Merton option pricing formula, and you can actually count it yourself. One of the first few activities that we have, when we get started as an issuer, is to calculate this entire thing on an Excel spreadsheet. I promise you, it's not very fun. But the only reason you can't do that yourself as a trader at home is because you don't know three key things for sure. You don't know the issuer's exact volatility, the exact interest rate, the exact dividend. So always the best way to look at a fair price for a structured warrant is to look at the live matrix over here. But let's say I really want to know what are the components of a structured warrant, right? We know that the pricing variables are the underlying price, exercise price, time to expiry. These ingredients, these 6 ingredients, are the ones that make the structured warrant cake, right? But how do we determine the pricing? So if you want to look a bit further into it, this is a bit more academic. I know. But for those of you who happen to be interested, and before you come and disturb me on Telegram, I'm going to tell you. So if you want to find out the time value and intrinsic value of a structured warrant, pretty simple. You've got the price minus exercise price divided by the ratio, and that's 32, and that's the intrinsic value of the warrant. Then you're wondering, how come Ta'an CQ is trading higher at 36 cents? The remaining is the 4 cents, the time value component. Let's say and compare that with a Hang Seng Index warrant. So Hang Seng Index warrants, they're a totally different animal. They've got enormous effective gearing versus Malaysian equity warrants. So Malaysian equity warrants would have a gearing of, say, 5 times to 10 times depending on its moneyness. But a Hang Seng Index call warrant, its effective gearing can be enormous. It can be something like 10 times or 50 times, and that's why you can really boost up your portfolio returns when you trade Hang Seng Index warrants. So same formula as well is derived through the Black-Scholes-Merton formula, but this is a bit tricky. I'm using a different example today. We're looking at a Hang Seng warrant that is... Can anybody tell me what's so special about this example? When the Hang Seng index price is 21,900 and the X price is 28,000, that means it is in the money, at the money, out of the money. I'm going to pretend that you're a live audience and I heard exactly what you said. Yes, it is out of the money. So that really means the intrinsic value is 0 and all of the pricing for that is time value. Now, moneyness. We're going to cover it in 2 halves. We're going to cover first the equity moneyness, and then we're going to look at Hang Seng Index in the money and out of the money warrants. But let's look at Malaysian equities first using our Ta'an example earlier. All right. So Ta'an, as you can see, the underlying, for example, is, I gave you a few different examples over here. 4 ringgit, 388, and $3. Ta'an CQ, the exercise price when the warrant issuer issued it was at 388. So when Ta'an, the underlying, actually moves above 388, say for example to 4 ringgit. You can see my white color nails, okay? I put it in front of the screen, all right. Over here, that means the warrant is in the money. That means when it expires, you actually receive a cash settlement transfer into your account. If it expires 388, that means you get a nice big fat egg, 0. And if it expires when the exercise price is 388 and it's 3 ringgit, that means you get 0 as well. That warrant is out of the money. But this only applies if you're holding it until expiry, until the warrant expires, which, for example, would be you holding it from 5th March all the way to the expiry date. So let's say when is the expiry date? 5th September. Oh no, this is 5th September 2022, for example. So let's say the expiry date is 5th September 2022 and you hold it till then, and then that's when all of this matters. Yeah. What's so important about the intrinsic value and time value that I mentioned earlier? So time value, you're actually paying for it. It is priced into your warrant. And what happens over time is that time value does erode. It chips off slightly at your warrant's price, even though your underlying is at the same price. So let's say the underlying does not move. Ta'an, for example, stays at 4 ringgit, for example. I know it's a lot higher now, but it's 4 ringgits, okay? What happens is the warrant, which is say priced at 36 cents, will slowly fall down in price according to the time value decay. And in the final month before expiry, it will be like a waterfall, they always say, because it will be an exceptional erosion of value. So we always say, or if you've listened to our other webinars that I've done, you would want to take profit when the technical analysis or whatever analysis you've done on Ta'an hits its target price, then you exit the warrant. You don't wait until expiry dates because issuers, we issue 12, 24 warrants every single month. And just because we put a exercise price of 388, it doesn't mean we think it's going to hit it or we don't think it's going to exceed it in any way. It's not a target price. It is just input that we put into our calculations to spit out a warrant price that we think will be attractive for you to trade, including the exercise ratio. So don't look at exercise price as a target price. I realize some traders do that. That will be inaccurate. So for Hang Seng Index warrants, I'm giving you a in-the-money example. Same thing, but Hang Seng Index warrants, the time value decay is much higher than equity warrants. Most of the time, I wouldn't say all the time actually. So what happens is you realize that time value decay does slowly erode your profits if you hold it for too long, because of that erosion we mentioned. And time value decay does happen over the weekend. So say if you bought a position on Thursday and Friday, unless you are very confident of a bullish or bearish news happening on Monday, there is a slight time value erosion happening over the weekend as well. Warrants don't know whether it's a public holiday or whether it's a Saturday or a Sunday. They are just slowly, tinily decaying. And an example, if we're looking at the moneyness of a Hang Seng Index warrant that's out of the money, let's say the strike price is 28,000 over here. Right, it's the same strike, same exercise because it's the same warrant. And let's look at this yellow one, the yellow example. So 28,000 is the exercise price, the strike, and 21,000 where the Hang Seng Index is trading now, it is obviously out of the money. But why? Why would you bother trading a warrant that is so out of the money? It is because out of the money warrants, they are cheaper in terms of absolute price, right? We covered this last week. When they are cheaper, the effective gearing is much higher. So a lot of individuals, they look for exceptionally high effective gearing. And because the Hang Seng Index, it's so volatile, it has no problem moving up 1,000, 1,005 points, 2,000 points in a day or two. So they take advantage of the high effective gearing offered by out-of-the-money Hang Seng Index warrants. Expiry. So earlier we covered the ingredients, the life of a warrant upon issuance, and now we're looking at expiry. What happens when it expires? So let's say you bought 100,000 MyEG warrants. Exercise price is 1 ringgit. I just made it easy for your calculation. And ratio is 2.5 warrants to 1 underlying share. What happens is, let's say expiry date is coming up, 21st May at 9 a.m. What you need to remember most of all is, say sometimes you want to hold a warrant because say you're making tons of money already on this warrant, and say MyEG, you think that it's gonna hit 150, so you're kind of waiting for 136, 138, 144, 147. What you may not remember sometimes is that the last trading day happens 3 days before the expiry. I mean, up to you how you want to calculate, but for me, I look at it as 1 day, 2 days, and 3rd day. Last trading, of course, is 5 p.m. Not so exact if you ask me. It's more about, I would be very safe and have my last trade at 4:40 p.m. because market makers are known to turn off their market making at 4:44, 4:43 sometimes. So you really want to be careful on these particular days. So you've got 5 days volume weighted average price. What this means is it's to calculate the cash settlement amount if the warrant expires in the money. That means as long as MyEG CW has 5 days of volume weighted average price above 1 ringgit, the exercise price. For example, 137 on day 1, 138, 144, 144, 147, I did the math for you. Minus 1 minus the exercise price divided by the ratio, you'll be getting 17 cents per warrant if it expires in the money. But what if you have a warrant that you know for sure, say MyEG is trading 95 cents, 96, 97, 98, and the exercise price is 1 ringgit. Do you panic? No. Because you know that, yeah, if it expires and you miss the last trading date, you do get a 0. You actually get a big fat egg. There's no way about it. You can't call me on Tuesday, 21st May and beg and say, Isabelle, can you please turn on the market making? I need to exit a position. You can't do that. And you guys laugh, okay? I know you guys are laughing, but I actually get those calls before, all right? So don't expect an issuer to be able to turn on market making just because you missed the last trading. It is not possible and it's not legal, and we just can't do that. The warrant has already been suspended and it's already thrown into the storeroom, okay? You can't bring it out from the dead, right? So if you're actually trading a warrant and you know you're very close to the expiry date, you need to remember that last trading happens 1, 2, 3 days. If you forget, always remember that if the expiry is on a Monday, you can only trade the warrants and exit your position on Wednesday before 4:44. All right, so be very mindful. A lot of individuals have actually lost a lot of money simply because they were actually in profit. Let's say they bought a MyEG warrant when it was 25 cents and it went to 30 cents. However, they forgot that it expired in the money. It expires out of the money. And then they totally missed the last trading. They can't exit a position. And then they are stuck with the out of the money warrants on expiry. And what happens? They just give the issuer free money. That's what happens, all right? That's not cool. And as somebody who's been trading before as a retailer, that is not a fun way to lose your money, all right? If more money that you want to get rid of, throw it to Isabelle or the Naga Warrants team, okay? Don't go and throw your money away like this. So if you have, I'll repeat it once more because it's so important. If the expiry date happens to be on a Monday, you need to remember the Wednesday. You need to actually do something about it. If you forget, put it in your calendar, put an alarm reminder to get out. For expiry for Hang Seng Index warrants, it is a little bit different because the cash settlement amount, it is calculated like this. You can find it on the Bursa website on nagawarrants.com. The exercise amount, you know how many warrants that you bought. Okay, I don't know how many you bought. 20 million, for example. You know the ratio. You know the closing level minus exercise level. You know the index currency amount. But there are a few things that you're not too sure of, and these things you need to actually call the issuer and find out if you really want to calculate your own cash settlement amount. As you can see, I just screenshot this from our previous warrants, HSI, CIW. All of these are in the term sheet available on nagawarrants.com. So you can just input all of this stuff into the actual formula if you are so willing to do so. And finally, some advantages, risks, and common mistakes. I would be doing you a great injustice in life if I told you that warrants trading is so easy. Why do you think we have these webinars for, right? It isn't really for me to get out here and show my fantastic bone structure and entertain you and waste your time on a Saturday morning. It is really because structured warrants, even though they are cheap, they are a listed derivative, and I say cheap because they are usually in the cents kind of range. People think that cheap means easy, and that is very not the case for structured warrants. Unfortunately, they are incredibly complex, even though they offer great advantages like gearing, limited loss where you only lose what you invested. It lets you profit from a bull market with a call warrant, a bear market with a put warrant. There's no margin call, lower capital outlay because they have lower absolute price. They let you release your share capital if you're doing a cash extraction strategy. Let's say you've got the underlying that already flew 5 ringgit up and you want to take some profits, but you don't want to release your exposure to that underlying. You can actually buy a warrant for a cheaper price or a cheaper capital exposure for the same exposure in the underlying for a cheaper price, you know what I mean? According to the delta. And of course, they are very easy to trade because they are listed. However, and this is a big however, structured warrants have all of these nuances, right? All of these little weird things, effective gearing, sensitivity, ticks, volatility that normal stock equities don't have. So for example, there is time decay risk. Earlier, we mentioned expiry. If you hold the warrant until you're out of the money and it expires on you, and what you thought was profit ends up to be a big fat egg. If you are holding, say, a Malaysian stock, right? I have one trader that likes to boast that 20 years ago, he had public bank at like 2 ringgit and it flew to the sky high, and then now, of course, it's split. But stocks you can actually pass on to your children, your grandchildren, whatever, right? But for structured warrants, you can't pass it on, okay? You can pass on your Patek Philippe watch if you wanted to, but you can't pass on a structured warrant for the next generation. It will expire. So time decay risk, also the expiry considerations. The gearing risk can actually be helped or mitigated. That means taken away if you have a good stop loss. Market risk is always going to be there. Liquidity risk is a bit less because issuers, they are usually in Malaysia anyway. They are by credible investment banks. So it is, I'm not saying impossible. We all know what happened to other banks in foreign countries, but it is improbable that issuers and their investment banks will kaput, all right? Improbable. Volatility risk will always be there, and the same thing goes for issuer default risk, like I mentioned earlier, and extraordinary price movements. You never really know what's going to happen in the markets. The second you're in the markets, you are ready for some unexpected things, right? The unknown unknowns. And foreign exchange risk is especially notable for Hang Seng Index. But the common mistakes that we always see, they're based on the musty strategy. What? So you've got the MESTI, M for matrix, E for effective gearing, S for tick sensitivity, time for time to expiry, and I for issuer. Basically, if you forget to do any one of these, you may be in trouble, and it'll be a big mistake. For example, if you don't look at the M for the musty strategy and you go for a ST strategy, okay? You choose an issuer with no live matrix, or you forgot to look at the grey and white zones to know the flipping points, or you never noticed the traffic light colors. If you go for issue with no live matrix, you don't know when the warrants will flip. So for example, an underlying could fly up 50 cents, 80 cents, and you're like, why is my warrant not moving? What price is it supposed to flip? And then you call the issuer and they don't answer the phone. And then you call and call and call, and after that, it's just extraordinary stress for nothing when you can just choose a structured warrant with a live matrix. Or you forget to look at the grey and white zones before you buy it. And sometimes if the live matrix it has the grey and white zones, it'll show you that that warrant actually has 50 ticks to flip. And after you buy it and you're like, why is this warrant not flipping? Why is the underlying already flying 50 cents and the warrant is still stuck there, right? I bought it when it was 3.5, 3 on the bid, 3.5 on the ask, and it's still there when the underlying has moved up 50 cents. It's because you've maybe forgot to look at the grey and white flipping zones on the live matrix. Not every issuer has a live matrix with a grey and white zone, but I can tell you we did it first because I came up with it because I am so blind, all right? The power of my contact lens, this one is like 1000 and this one is like 800, all right? So I find the grey and white thing much easier to look at for ticks than looking at the little tiny numbers and 3 decimal points. And also, they never notice the traffic lights. That's what happens when you buy or enter a position when the structured warrant is already showing a red color highlight. When it is a green color highlight on the live matrix traffic lights, you can enter, but you avoid the orange and the red. However, you want to exit, you can exit at all 3, green, orange, my fingers cannot move that way, green, orange, and red. You can exit a position easily on any color. But sometimes if you enter at the red or the orange, that's a bit tricky, because other retailers can be queuing in between your price. Next one is you want to balance effective gearing and sensitivity. Some individuals, they might choose a warrant with very high effective gearing. High effective gearing warrants can be something like 0.005 cents, that means half cent warrants, and it might take many ticks to flip because they're very deep in the money. So you'll have a matrix that is like grey and then white, and then that's it. It is maybe 50 ticks, that kind of thing. And it's very hard to flip if it's so deep in the money, if it's very high effective gearing. So you want to find a sweet spot and balance it in between, all right? T is when you forget that there is theta and expiry dates. Avoid the final month before expiry because time value decay is like a waterfall. And I, issuer, if you don't ask the issuer any questions, I don't know what you don't know. All right, every day we get about 20 phone calls on an assortment of things, and in these webinars I really do try to cover as much of those FAQs which I've compiled over the years, but sometimes we just don't know, maybe some wrong concept that you might have on structured warrants or the underlying itself. So sometimes if your question isn't answered here in our FAQs, I would really love it if you just dropped us a Telegram private message. That's at Naga Warrants Team. Naga Warrants Team is our private one-to-one chat. Don't worry, nobody can see if you ask us very stupid questions. It's fine. You know what they always say? One stupid question and you're stupid for a moment, but at least you know the answer, right? And trust me, I've asked all of the stupid questions before, okay? So in this week, which is part 2 of our Q2 Market Outlook that we've covered last week, we did it with Mr. Kevin, and this week we did with Mr. Johan. We've answered all of those questions in our FAQ, the red color ones. Hopefully in the next sessions, we'll answer a few more questions in the FAQs. These days, I've already done a corporate adjustment. I've already covered most of the tricky things. But if you want to check those out, our videos are on the Kenanga Group YouTube. Please leave a comment, share the videos if you want. And of course, giveaways. Ooh, you already saw the question, so you gotta be quick. Q1 for the 100 ringgit Shopee voucher. Why is it so important to refer to the live matrix? For a 100 ringgit Shopee voucher, please answer. Is it A, live matrix displays market makers buy offer prices, or live matrix displays increased offer prices, or live matrix displays warrant flipping points? Before you answer this question, remember that to write Q1 so I know which question you're answering, okay? You can write 1 or Q1, doesn't matter, just get the answer correct. Alright, I'll give you 5 seconds to answer this. 5, 4, 3, 2. You guys are replying really fast. I can't even see. 1. Alright. Don't worry, I'll announce the winners on our Telegram channel on Monday, and we will announce the winner for these Garmin watches. I got 5. So Q1, live matrix displays all of the above. Like I said, it offers buy and offer prices by the issuer, increase offer prices when it's yellow, while amber or red highlight. Fantastic handwriting, Isabelle. And live matrix displays the warrant flipping points in the gray or white levels, right? So it actually shows all of these things just on one simple table. Question number 2. I may sell my warrants A, on expiry date. B, 1 day before expiry date. C, 2 days before expiry date. D, 3 days before expiry date. E, for elephant. 5, 4, 3, 2, 1. And the answer is 3 days before expiry date. Of course, you can count it however you want, but for my example just now, I showed you how to count, right? Q3. Remember to put Q3 or number 3 before you answer the question, or else it's just going to be a mess in the chat when I look at it later. How many ticks sensitivity is Hibiscus C20? So Hibiscus C20 is this warrant. How many ticks sensitivity does this warrant have? Every single warrant has a different tick count, and yes, the ticks can change as the warrants move deeper out of the money or deeper in the money or approaching at the money, and when it flips from below 1 ringgit to above 1 ringgit. But this particular warrant, how many ticks does it have? 5, 4, 3, 2, 1. The answer is 3 to 4 ticks. And the way we count it is by looking at the gray and white zones, right? For example, I can see this is 3, this is 3, this is 3, this is 4. It's quite easy to count how many ticks once you're familiar with it. You just look at the gray and white. Next, question 4. If Hong Seng CE's XYZ, what is XYZ? Is 1.66x. It means if Hong Seng itself goes up 1%, Hong Seng CE will go up 1.84. That is clearly wrong on my slides, but the answer still remains. The correct slide should be saying Hong Seng will go up 1.66. Never mind, if you get the answer, you get the answer right. Doesn't matter what the question is because there's only one answer. 5, 4, 3, 2. You can tell this is clearly live. 1, by all the mistakes I'm making. Effective gearing. Right? If effective gearing states that if Hong Seng moves up by, the underlying moves up by 1%, then if the effective gearing is 1.66, the warrant itself will go up 1.66%. If Hong Seng, the underlying, goes down 1%, if the effective gearing is 1.66, the warrant will go down by 1.66%. Effective gearing. Oh, and that wraps it up actually for today. Wonderful. We have a few other giveaways and we will be giving them away to individuals who stay until the end of this session. Thank you so much for joining us today. We'll be giving away a bunch of prizes and Garmin watches as well for those of you who asked the best question. You can still ask questions. You can still ask me questions right now. I'm going to swing by the laptop and reply some of your burning questions. You can ask Mr. Johan some questions. He's ready to answer questions as well. And we will compile all of these and put them on our Telegram channel so all of you can read them on Monday at your own pace. If my presentation has completely melted your brain. Thank you so much for joining us on Q2's Market Outlook on Hong Kong, the technicals. We'll be having another session for Malaysian equities in the upcoming months, and we plan to do this every single quarter. Quarter 2, we'll do fundamentals technicals. Quarter 3, fundamentals technicals. Quarter 4, fundamentals technicals for Hong Kong. And we'll slot in Malaysian equities in between. So, ladies and gents, thank you again for joining us on this marvelous Saturday morning. For those questions, please do share them with us on our Telegram private chat. And if you want to win those Garmin watches, the Kenanga Facebook, you just need to go to the post with Mr. Johan's face on it, share it, and write your 3 key takeaways. We'll go through all the 3 key takeaways. I always find that you learn better when you are sharing that knowledge or teaching somebody else about it. And it makes you distill the information better. So help us help you, take these watches away from our hands. Until our next session, thank you so much for joining us. It's the Kenanga Market Outlook on Hong Kong, the technicals, and thank you. Thank you as well to our speaker, Mr. Johan. Bye.